following is a key technical and fundamental analysis on Nike, a company of the consumer cyclical sector in footwear and accessories based upon the quarterly interval. And I believe we've reached some key pivotal transitioning points in which Shenanigans and a few other subscribers reached out to give them some key transitioning points and or pivot points for loading up on the dollar cost averaging basis for the long-term portfolio if and when you are a long-term believer in the structure of the company and a strength in the management team for the ultimate long-term investment. And this is the reason why we're going out to the big picture, spanning back since 1985. But I want to go over some of the key aspects of the Nike's Q4 2024 earnings call, where the full year fiscal 2024 revenue grew 1% on a currency neutral basis, with a ton of volatility arising within the FX currency exchange markets, where earnings per share grew 15%, Q revenue flat year over year. There was some pretty strong gains in performance products, where these were really offset by declines in lifestyle products, impacting digital results significantly, which led off to a really violent sell-off, where some of these trends have led to a reduction in guidance for fiscal 2025, and that's when margin calls, stops to go off, you name it, completely took out some key technical levels based upon some of the much larger near-term intervals, where Nike is beginning to focus on accelerating its innovation pipeline, including pulling forward several initiatives like Speed Lane, utilizing to accelerate design and development new processes, where performance segments such as basketball, fitness, and running showed significant growth with double-digit gains in some of the key sports sectors, where the pain came from the Nike digital declining by double digits and 10% in Q4, attributing to softer traffic, where now it begins to see where, again, the strategic shifts in leadership where Nike is undergoing, including leadership changes, organizational adjustments aimed at accelerating innovation and consumer engagement. They emphasize on putting sports back at the center of the brand with a strong push towards innovation and performance products. Whereas new innovations in basketball with the GT cut, Kobe's footwear, and Sabrina's new leggings, free Metcon, and running products that were beginning to take the center stage in the earnings call, were efforts to build a diversified lifestyle footwear portfolio, including new products like the Air Max DN and leveraging the Dynamic Air innovation platform. Some of the biggest challenges in the key markets are the greater China with a decline in brick and mortar traffic. That is the online digital sales, where mixed trends, and other markets highlighting macroeconomic uncertainties affecting consumer behavior. And that's where the real telltale is. Pool Corporation had just released some pretty dire earnings report, as well as McDonald's, Coca-Cola, and some of the middle consumer sentiment is beginning to crack underneath the hood as Goldman Sachs continues to short the middle consumer. In what really shifted into a fourth or fifth gear in the selling department, where the decline in digital sales, despite a historical compound annual growth rate of 26% since fiscal 2019, raises questions about the effectiveness of current digital strategies and consumer engagement. And once again, that's where big selling occurred, where worsening foreign exchange impacts and other significant effects on revenue projections might indicate over-reliance on specific markets and currency conditions. I have to say that the odds are increased at a challenging but transformative period for the company, where the focus on innovation and strategic adjustments aims to position Nike for long-term growth, although short-term, particularly within the digital and certain geographical markets, are clearly evident and beginning to slow down as a much larger depression and or deeper recession begins to cave in through China and the mainland, where the emphasis on balancing performance and lifestyle products, along with proactive market adjustments, underscores Nike's adaptive strategy in a dynamic global market that is currently shifting in either direction. Deep diving straight into the technical aspects of the chart, upon zooming you out to the much larger picture, back to the quarterly interval here, each candle representing a quarter of time, we are reflecting and backtesting the 50 quarterly moving average, and that has been defended heavily each and every time it has been reflected upon the dot-com bubble crash marked the bottom, and then as well as the 2008 financial collapse marked the bottom, and then as well as near term, close to the 2022 fastest rate hike in history, nearly coming shy of retapping that key transition point. And here we are, retapping the 50 quarterly moving average, increasing the odds of a significant dollar cost averaging event for any long-term believers and in a long-term investment in Nike. I'm going to zoom in here to the monthly interval, and I believe we are testing the 200 exponential monthly moving average, and that will be an ideal transitioning point for the first time ever of reacting and or coming back to retest and rechallenge with what below is the 200 monthly moving average and the 200 exponential moving average, two primarily moving average support levels that could be within the beginning stages of being retested in a for the first time ever since its inception on the New York Stock Exchange. From a pure technical standpoint, we have a gorgeous head and shoulder classic looking top here, and that could be the split of the neckline for an underlying increasing the odds for a much larger drop to come. And here are some key technical levels to follow up on, where you had a well-defined, beautiful divergent high, nice clean, big divergences, confirmed bearish crossovers in the moving average convergence with big drop downs below its zero line thresholds in the oscillator histogram, snapped it, put in that key big breakdown sell signal, back tested, was rejected impulsively, came back, had a nice sizable 76% rally right back into the bottom of that primary reactionary uptrend line, and was rejected once again impulsively. And it has never looked back since. And it has retested and officially taken out its 2022 Jerome Powell's fastest bear market hike in history. And that has been completely taken out with conviction now, going on to potentially retest the COVID major lows. When the entire economy was shut down throughout that entire span of time, you are now looking at a 74-20-ish spot range after a 20% single day crash, spanning back till 2018, 2019 levels. And these are some key technical levels, 680, 65, which would be another 9% crash from here, back to retest the 200 monthly moving average with a secondary primary uptrend line here for another 15.5% crash, down to that secondary price support level at 59.78 for a 21% crash. 50.47, my ultimate last target, I do not want to see go without losing the technical posture within a bullish longer-term trend. You will increase the odds of significant technical damage constructing within the technical momentum indicators, only increasing the odds of taking that level out would only ensue a plethora of selling, forced calls, margin calls to go off, some big stops to be hit with some buying orders completely taken out. That would be the ultimate level I would play, especially for a bounce. If you are a long-term investor and solely believe in the management company, this is not investment advice. I do not know enough about the company. You need to really do your own diligent research and peer into the financial health of the company. These are longer-term key technical levels that increase the odds that there will be a significant reaction if and when retested. If you are a long-term investor in Nike, you are sitting on a close to 60% complete crash discount there. And these would be some additional levels to buy into, set some starter positions for an additional longer term bounce. And if not, you have a primary reactionary uptrend line off the 1991 major reactionary lows here that has had some significant weighting and or psychological buying pivot points each and every time we have retested, call it multi-generational price support. And that would be the ultimate longer term, another 18% crash from here, a lot of pain to come if and when we go on to retest and are not reflected upon the 200 monthly exponential moving average. That could, again, seed in for a longer term buying pivot point. If and when we hit that 59.78 range, I will more than likely lever up on some call options, looking for any near-term interval hourly price odd positive and or bullish divergences that may occur within the near term, honing in on some additional clues if and when some of the key transitioning points are met and reflected among the technical momentum indicators. Make no mistake about it, these are your key buying zones. Again, loading up here below this 200 exponential monthly moving average is a great buying zone down to the 68.65 and the primary uptrend line in correlation, call it duo and or triple transitioning point of price support with the 200 monthly moving average and the 59.78 price support below and your primary secondary uptrend line. Well, that is a great, significant, especially if we flush down towards that key level. I'd love to see it slam down as hard like a Nike basketball for a potential big counter trend bounce. Make no mistake about it, I believe some of these key transitioning points will have significant reaction if and when retested once again.